TV, TV, TV. Millennium TV. We mean business. Millennium TV. 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 Millennium TV. We mean business. Millennium TV. 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 Millennium TV. We mean business.
Welcome to your special edition of Business Day. Today, we'll be discussing Financial Literacy Week. And we're joined in the studio today by Ms. Kabinde Kaweshe from Bank of Zambia, who is the Manager of Financial Sector Development, as we go through the journey of understanding financial literacy, financial matters, child financial literacy, financial inclusion, and various other segments that we'll be going through, where we'll be interacting with you and interacting with one another. So, welcome, Ms. Kaweshe.
Thank you, Munyumba, and good afternoon, viewers. It's a pleasure to be here today. Thank you.
Well, to jump right into it, I mean, financial literacy is something that is on everyone's lips and in the cusp of the conversations today, especially in tough financial times like this. So, just to get to the swing of it, why do we commemorate Financial Literacy Week? Maybe just to get from that point.
Thank you. So this week, from Monday to Saturday, we've been commemorating the 2021 Financial Literacy Week. It's a public campaign where we're creating awareness amongst all our citizens, be it children, youth, adults, SME businesses, and even corporate businesses, about the importance of personal finance, managing our finances. And we are commemorating it alongside a global initiative. So its history is established in what we call the Global Money Week. And as Zambia, we subscribed to the Global Money Week so that we could not only be on our own, but also join the international community in this important venture. So as a nation, we do have a national strategy on financial education, which is under the Ministry of Finance. And the Financial Literacy Week has now been established as an official campaign. So it's a time when all of us can come together. We are all looking at the same topic of the theme, but looking at it from different perspectives. So what would apply to children, it would be different from what would apply to adults, but we are all looking at the same topic at one specific time. So this is one of the reasons we are commemorating the Financial Literacy Week.
Now, that's very important, and I understand that. So given that it is tense financial times, I mean, that's one of the things I think we can't skirt away from the reality. And I think as Bank of Zambia and FinScope, there was the earlier publication of the top-line findings of this. They usually do it every 5 years, if I'm correct, the FinScope survey. And there was one number that jumped out to me. Okay. And it said about only 13.6, if I'm correct, percent of adults are financially healthy. And being at a time that it's also about physical health, that usually gets sidelined. So I think I wanted to speak to this in three different sections. And in the first section, I want to ask the question, is there a correlation, and this has been a debate before, between financial health and physical health? Do we find that there is the actual blend between financial health and physical health?
Yes, there is a correlation, and part of that correlation has been taken up as part of the theme for this Financial Literacy Week. So the Financial Literacy Week theme is take care of your health and take care of your money. And from the perspective of like the policy regulation and looking at the need to create awareness, apart from just creating awareness and the knowledge, we want to also measure how financially healthy our citizens are, our programs working well. Or if we take a certain measure, would that now provide a basis for us to even increase the number of programs that we are providing and even speak to particular target groups where maybe there are indications that they may not be doing well personally in terms of managing their finances. So one of the new measures we introduced last year when we were measuring the financial access in Zambia was financial health. So financial health is a concept that talks about how people are using financial services to manage their day-to-day living, to protect themselves and also prepare for their future. So as you rightly said, I think that number that jumped out of you was quite significant because it seemed to show that very few people were financially healthy. And you'd find that if you're not able to manage your day-to-day expenses, you're not really sure about the future, it causes stress. So when you're stressed, you're a bit anxious, you're very uncertain, it can cause, it can affect your health. And other ways in which we talk about you being healthy, apart from being you're financially healthy, especially under these circumstances, is the need for you to either exercise, look at your nutrition, go for your regular checkup, adhere to these the current public guidelines on masking up, social distancing, washing your hands with soap and sanitizing, because we want people to be healthy enough to be productive. If you're feeling healthy, if you're feeling well, then you can go about your business, you can go to school, you can go to work, and there are no interruptions to your business. So there's that correlation, because if you're able to work and be productive, you can then earn your income. And then as you earn that income, how are you then managing it for your day-to-day expenses? How are you managing your debt? And that would then speak to you being financially healthy. So this is how these concepts come together. They speak to the overall well-being of a person, your health, your finances. I think we're talking about now even like your mental health. So, exactly. And that's in a motivation, also your spiritual health. So it's looking at the total well-being of a person, and then we just take this time to say, okay, out of these factors, let's look at your financial health so that I think you live more productively.
But even just to double click on that, that is the new terminology of the new digital era, to double click. Right. But even just to double click on that, there is a concept that is going around that a lot of people end up suffering or succumbing to illnesses that they otherwise could afford if in a financially healthy state, where maybe you do have access to healthcare, where you do have access to these things. And usually when you're financially fit, you can take these precautions, or you can easily go to the hospital and so forth. So maybe the question I wanted to ask is it recognized also here that not only does your physical health feed into your financial health, but your financial health can also feed into your physical health, yes, and affect that too?
Yes, I think that's a very good question on how your financial health can feed into your physical health. Because with your financial health, with your finances, you can put in place programs or a product that can take care of you when you're not feeling well. So for example, we have like health insurance products. So with health insurance, you're paying premiums, you're paying towards your health should you fall unwell. So that way you're preserving that. And then also with your financial health, we look at a concept called key life events. So key life events, you're talking about emergencies or even your health. So it's also part of your lifestyle. So when we talk about either saving or budgeting or spending, put something aside for your health. Even something as simple as a toothache. Yes. That is just common. You might have a headache. Can you go to the drugstore? Can you go to the dentist? Just to, to ensure that you get some medication or a medical checkup to feel much better. So having a financial base or income to help you meet those medical expenses is important. In fact, the medical expenses is really an investment in yourself.
Yes.
Yeah, so it's something that all of us should be mindful of, and I'm glad, like even in previous campaigns, we have had stakeholders who've even gone to like the under 5 clinics, speaking to mothers, like take care of your health, even as you are looking at expecting a newborn baby, like even save for them. So for your under 5 needs. So there is that good correlation between these concepts.
And the strangest concept, I mean, obviously this is more a statement, is that the more you plan for something, the less these bad things tend to happen sometimes. I mean, there's no scientific fact to it, but I'm just saying, from experience, sometimes you feel that when you actually now plan for eventualities, they don't come. But the moment you're not unplanned, or the moment it's unplanned, all of a sudden everything comes to happen to you.
It's true, and you just need that, and those are the emergency funds we talk about. Just keep something in the event. Something unexpected happens.
So going into, obviously, savings and investment, I mean, that's a big part of it. I mean, we've talked about financial health, but I think before we get into savings and investment, we've talked about in terms of physical health and financial health. But I think the coronavirus gave us a glimpse into a world we never thought we'd see, where we have to pick between our finances and our physical health. And I think this is where the debate started to come about, whether physical health is more important than financial health is more important than physical health. While some voices would stand in the middle and say, hold on, people, these two things are equally as important. Being financially healthy is equally as important, because yes, you can be physically healthy, but if you're living under stress and pain, is that a lifestyle where you're alive but in anguish, worried about whether you're going to eat a meal? And I'm gonna cite another stat that you have in there, which I think pointed out to the fact of the people who have enough money to see the end of the day or to deal with day-to-day expenses. And it said only about 40%, if I'm correct. I just need to get that number correct. And that's a shocking number. In fact, no, it said 40% of the people cannot manage their day-to-day expenses. So 40% of the country waking up in the morning, not sure if they're going to eat, not sure if, and then we're not sure as well. And even for COVID lockdowns, just to explain this, we weren't able to extend that courtesy of just locking down normally, because everyone's a day-to-day worker trying to make their money. How does this speak to the importance, and maybe that's the question I wanted to ask, of how does it speak to the importance of financial health standing alongside physical health as another form of wellness, as you spoke about?
Yes.
That we should always consider and make sure that both are in a good state, not just one or the other.
Okay. Both are very, very important, and I think during this prevailing situation, the importance of health has really come to the fore. Taking care of our health, as I would again say, like good nutrition. I've seen so many messages, even just about our local vegetables, you know, things that work well for us. So that has now become a priority, and I do relate and empathize, you know, like with the statistics that talks about the challenges with the day-to-day living expenses. The cost of living is sometimes a challenge, and you know that those challenges are across the board, and it's also now a reflection on like how are our lifestyles. Are we failing to meet day-to-day expenses because we are taking on maybe unnecessary or high debt? Are we living beyond our means? And some of the, you know, like the ability to meet the day-to-day expenses also looks at whether are we being even productive in the context of do we want to buy everything that we could even just produce for ourselves? So, for example, during this time, I've been surprisingly even just pondering a garden, you know, because we need to eat vegetables every day, and every day we are spending. So, like, but what about growing the cabbages, the spinach? What about rearing chickens? So those are like some of the day-to-day expenses. As you say, when we're looking at the day-to-day expenses, it's your airtime. You know, it's not like your school fees. Yes. It's what are those day-to-day expenses? Is it your transport? Is it your food? Do you get an emergency call? So one way of trying to manage that is look at your daily expenses. I do appreciate people will prioritize, like for school or for accommodation, put that aside. But even when we talk about the savings, it's even to meet those daily expenses. You know, when we say put aside the 10 kwacha, 20 kwacha, that cumulative effect can give you the 100 kwacha or 50 kwacha to buy food for today. It can give you maybe something to buy your medication. And Yes, so it's really from that perspective, but that's the importance of like this financial literacy is we look at those numbers and we say, okay, how do we then help people cope with this? Should people look at diversifying their income? Should they look at maybe some kind of entrepreneurial activity? Or as we're looking at now, like even agriculture, going back and maybe even being able to engage in more subsistence farming. So those are then the statistics that we look at, and then we'll engage with other stakeholders and say, how do we address these challenges?
I think for one of the questions, I think when it comes to that, I think this maybe just came to mind. Some of the other numbers we've seen out there, which, like I said, there's a lot of, once you speak about financial health of the Zambian people, it becomes alarming. Everything is almost at an emergency situation, because then you realize where the ill health of our nation sometimes comes from, or from a household financial basis. Here's a number that came to me recently. The average formal sector employee earns about 7,000 kwacha, informal sector about 4,500 kwacha, according to the last labor force survey 2019. And then the average household is about 1.5 incomes per household, according to the same statistics when you looked at all the labor earners and the households together. So if you're putting all that together, you're looking at about an average household making about 6,000 to 7,000 on average. That's really what you're looking at. However, when you go into, and I think it was the Jesuits who had this number, the average household, the average rental cost. And I think that's the one that really got me, I think, from even the Lusaka base. And they gave the Lusaka number, 3,300 kwacha, being the average, which is almost half an average house's income. When I think Dave Ramsey did say this, that a household should never cost more than 25%. Your house, your utilities, all that together. The moment you're spending more than that, you're doomed for ill health. Are we not also looking at strategies around the housing market to try and get away from this dislocation where everyone is pouring all their money into housing and then leaving them in a situation where they have to scrap and fight against food and survival and dooming them to a life of ill health? How are we looking at even the financing and sectors of the housing? Is there an integration between financial sector development and the housing market to try and make this a sustainable venture, or have we thought about how to bring that together?
All right. So to that, what I would say, like on an optimistic level, is that I think people have become very aware of the high cost of accommodation, especially rental accommodation. So in the past few years, we've seen this drive where everybody wants to ensure that one of their biggest investments is investing in their shelter, investing in their own house. And there's, I think, this optimism that as long as you have the roof, maybe there's even just running water, move in and then save or reduce on that household expenses. So I think a lot of investment now is going into asset building. For people to construct their own houses and where possible maybe get a mortgage. So with the relation to like financial inclusion or financial health, we do have a housing market. We do have a supervisory department, for example, at Bank of Zambia, where we do supervise and regulate the building societies. So even the building societies, I think, are making efforts to promote some products at affordable interest rates so that they could also support the growth and interest for people to develop that housing. And we've also seen a big diversity now in the type of loans that are available for housing. So now you have construction loans. Those loans are also being structured for you to get them in phases so that it's not a big financial burden. Yes. So I think there is that drive to really manage those accommodation and rental costs by a lot of citizens. Yeah.
All right, so I think we've pretty much knuckled into the introductions of financial literacy. Going into the second section, I think this is the next section we want to try and look at is savings and investment. So, and the thing is, I was going into that side because if we're obviously trying to work on trying to bring the housing market into a more sustainable fold, then people can start talking about saving. So I think the biggest misnomer is that we use the word saving and investment kind of interchangeably, quite easily. We just always dance between those words. So the question I would like to ask then is, what in the actual definition is savings and investment, and the difference between the two?
Okay, so savings, we try to put it as like a habit, something you do. It's just like if I take tea every morning. It's just a habit. I like to drink tea. So with savings, it's a habit or culture where we just say put aside some of your income, put aside some of your money. Don't spend everything at one go. So it's just a habit of putting money aside for your future needs or even your current needs. But it's about managing your consumption and then putting aside some money that you can then use for, let's like if you have set a goal or just something that you just put on reserve. So it's a good discipline or a habit to develop. And then with investments, this is now when you want to also make something like a profit on top of your money. So you want to earn maybe something like a dividend. So you'd be saying, okay, what can I invest in? Because you'd say, I'm putting in 100 kwacha, but on top of this 100 kwacha, I'm putting my 100 kwacha in a venture, or I'm putting it in a certain account or a share, and I want to earn something on top of it. So it's more about like earning a return or a profit or a dividend. You want to gain something on the money that you have set aside. So then people would normally choose different products for their savings or for their investments. So a very simple example is like a piggy bank. There you just say it's just a savings mechanism. It's just somewhere I can just put money aside, but it won't earn me interest or profit. So to do that, I will now look for an investment. It could be a business or it could be a particular financial product where at the end of a certain period of time, I want to see how much I've earned on it. There could be some risks which I need to manage. So I could either do it myself or I could get somebody who's more professionally trained or certified to make that investment for me. But it also has a longer term horizon. So those are some of the distinguishing features between the two concepts.
And obviously, I think the biggest battle when it comes to savings and investments is long-term thinking versus short-term thinking. I know I've been asked the question, how much will I make? And I always tell people, 20 years, 30 years, ooh, 30 years.
It always seems like a long time, but 5 years, ask yourself, where were you 5 years ago? Or even just 2 years ago? Where would you have been if you had saved a 50 kwacha every month? And where you are today? So there's always that feeling that the long term is too long term, but I think as you accumulate it, I think that's one of the important concepts of saving. As you accumulate, I think you get that motivation and encouragement that, oh, I started January with 50 kwacha, I have now accumulated 500 or 600 kwacha, so I can go on, I can do it. So
there are two things regarding savings I think we need to really harp into, and it's got to do with our culture as a country. Because I think if we're talking about financial literacy and we're talking about how to handle savings and investment, what the biggest battle is always going to be the culture of our people. And when I say that, I mean our cultural practices. Because one of our old cultural practices was, if I have as many children as I can have, they are my retirement. My children will take care of me in my olden days. But in today's world, parents are taking care of children now who are 30, 40 years old because of the job market. So the question would be, how are we dismantling or dealing with that thought pattern of my children will take care of me, to now start saying, I need to start preparing for my retirement and my older years, because what if the job market is harsh? Because this generation of parents, those who are retiring, have just found themselves with children who are in their 30s and 40s who are struggling to take care of their own homes. Now, what more trying to take care of you? So the question is, are we starting to tell people, one, you're going to live long. This thing of believing that you're going to pass away at 40, it's no longer. Average Zambians are living to 65. And two, your kids are no longer a retirement plan. I mean, how are you dealing with that? Now on the ground level, how are you dealing with those things?
So fortunately, I think in the past, it's like 8-7 years, the culture is changing. I think ever since the national strategy was launched and we've been talking about these concepts or embedding them in the education system and even providing people with either the tools or mechanisms that they can use to save, that mindset has started improving. I think there's this awareness people have about like the savings. So from young children, I think throughout all the age groups, that concept is taking place. So on a positive note, the savings culture is improving. the awareness of the need to save is also improving. And aligned with that, when, as you've mentioned, like people are thinking about their retirement and the long term, I think there's also an interest now in investments or entrepreneurship, just something that people can have to sustain their livelihood. So there is that positive change. So that's what we're doing on the ground. And yes, there are those challenges where you can have a situation where a senior citizen is still having to look after a child who is unemployed. But I think through even now the emphasis on entrepreneurship is key, that you can have a resource, you can do something which is productive. So I think that change is taking place. I think there's a very good culture now about the entrepreneurship, and it's all about the need to earn an income, have a livelihood, like support yourself, whatever you can earn and adjust to your lifestyle is what is important. And you don't need to compare yourself to somebody else, as long as you're trying at least as best as you can to meet your expenses. I think that is, we're beginning to see that change.
I mean, looking at, you did mention that there has been an improvement in culture, and I would like to state this. I looked at the Bank of Zambia last decade statistics, your financial sector statistics of 2019,
Okay.
which actually did show an uptick over the last decade in bank savings deposits. The accounts obviously took a dive in 2019, but if you're looking at it from 2010, we actually have been seeing a drive upwards in savings account. What would you attribute to that?
Okay, so there are various factors. I think there's a combination. So we're looking at, because I think you mentioned like there was a dive,
Yeah.
but I think we're looking at what other new products have come on the market. So with the mobile banking, e-wallets, and other diverse type of bank-related products, maybe even the diverse savings accounts. We've got even accounts for children, for youth. I've seen some labeled as senior citizens accounts. So I think when people have more options and varieties for what they can save for. And then I think even some of the products are also being labeled in that context. So we have products that are being labeled for specific purposes, like is this for your education?
Purpose-driven saving.
Yeah, purpose-driven saving. So there's that upward trend in the deposit base, and it also takes into account, even from the mobile side, there's also a growth in that type of tool. So I think people now have somewhere where they can place their money, and one of the benefits of maybe even saving mobile is that you don't, or the bank account, you don't have loose change that you can easily spend. So if your bill is 100 kwacha, you will pay 100 kwacha. Or if it was 80 kwacha, you will just pay 80 kwacha. But when you have, let's say, like cash, and your bill is 80 kwacha, that 20 kwacha change, there's sometimes a temptation to spend it. So I think there's also more discipline, more tracking of financial expenditure, which is also then helping people better manage their finances.
So for behavioral purposes, when it comes to saving, because we're going to get into investing, when it comes to saving, what's the better move? Because the argument is always, I'll save for my leftovers, but then you've got some other who preach financial peace and who say you've got to save first. Treat saving like a tax, or almost like paying yourself in the future,
Yes.
Rather than paying yourself after. So which school of thought do we promote? Because that's where I think the struggle comes. People say, I'd love to save, but I don't have enough money. But then my argument is always, start by saving, and then live off what's remaining.
Exactly.
Which one holds better for that?
So we are promoting that principle where if you have an income or a source of money, pay yourself first. So set aside savings and then look at how you're going to manage your expenses. And it's something that we have been promoting. I think even in previous campaigns, that was a formula promoted by the Minister of Finance, where it says income minus savings equals the balance is for consumption. So we're looking at it in that context.
Okay, no,
And
yeah.
I think just to mention, I've heard the argument that, no, I don't have enough money to save. We had a concept or a theme where we just said every ngwe counts. So it's not how much, save according to what you can. There's no prescribed like limit or balance where you say you have to save 100 kwacha, 200 kwacha. Even that one ngwe makes a big difference. You know, when you like go into the communities, just to put it into context, and I think you're talking about food. You know, when you drive through some of the communities, you know, you can find tomato or potatoes going for 5 kwacha. So in communities, relative to the economy, the environment there, what you save or what you have on hand can meet expenses in that context. So it's not how much. I think everybody can save. It's just starting to develop that habit, that confidence. Just save what is comfortable for you.
And I think maybe I'll chime in there just for one point as well. Saving is based on what you can afford to save.
Yes.
And I think that's one thing I've also tried to live by. If you can save 50 kwacha, save 50 kwacha. I had an old mentor named Mr. Diasis who once was speaking to the youth once, and he said, and was speaking to high school students, and he said, if you save 2 kwacha, you're 2 kwacha richer than you were yesterday.
Exactly.
So that, I think, is the principle that we want to try and hold on to. And then now looking at we always have to look at the numbers of our country. Yeah. Bear in mind that most people who are talking about retirement, we talked about retirement earlier. If I've got a formal job, my employer and I have already made an agreement that I'm taking 5% is going to NAPSA. I'm taking another 10% or 7%, it's going to my occupational savings. Now, only about 82,000 Zambians actually have access to occupational savings, because we're even still underfunded there, but really only about, and I'm really looking at the younger population here, those who are between 40 and 20, only 8% of the 5.5 million Zambians who are between 20 and 40 have actually got a full-time paying job where they actually get a salary, and they can have access to that. And only about 50,000 young Zambians between 20 and 40 have got access to an occupational pension, at least above their NAPSA. Okay. And obviously the calculations always show that NAPSA maybe will handle about 20-30% of your final salary, and then the rest has to be done by an occupational pension. So the question here is, those who are self-employed and those who are entrepreneurial as well, because they're not living on a standard fee. What are we doing to make sure that they understand the importance of making sure they put aside a money, and even just say, I'm putting aside X amount per kwacha I earn every single month, no matter how much it is, I've got a rule and a principle that I'm putting away to make sure that I'm taking care of Munyumba in the future, rather than waiting for my children who may not be in the situation to take care of me.
No, it's a very valid question, and even under the strategy, we have that target group. Like, how do we talk to those in SMEs, those who don't have regular monthly income, on how to save or put aside something for their future, even where they don't have a pension. So it will still come back to the same principle, that put aside something that you can afford, even when you can afford to put that aside, because we know that the income will be irregular. So this month, if you do receive something, put something aside. Maybe next month, maybe inflows might be a challenge, but the following month, put something aside. So we don't want people to have this guilt that they're not putting. Just be able to put aside something when you can. And I think there's even, just being very realistic. And just also taking care of yourself for the future. Because if you look at what a pension is, this is an income who somebody who was working is going to get when they stop working. So then you could ask yourself and say, okay, if that happens to me, when I stop, what do I earn? So it's really about your personal finance, your personal social security. And, you know, when you talk about financial planning, it takes time. Just from a personal experience, you know, even when I want to sit and say, okay, how am I going to manage my finances? It can take a whole day, like let's say like over a weekend. So even the time that you commit to look at what your finances are, how are you going to plan, what type of formulas, how much should I put aside, it's not something that would take you about an hour, 30 minutes. You have to look at all the calculations, make all the adjustments, but put it in your formula. You know, as an SME, in fact, what we also promote amongst SMEs is that separate your personal income from the business. So let the business pay you a salary. So for you who's receiving a salary as someone who's running a business, you could be receiving a salary, let's say 2,000 kwacha. Somebody who is also in pension is also earning 2,000 kwacha. So then you'd ask yourself, if that person who's earning 2,000 kwacha can deduct 500 kwacha and put aside in a pension, maybe the employer-based pension, what is then stopping me, somebody who's in business, so from also putting aside a 500 kwacha? So you can have two people, the same amount of money, earned in different ways, but one has the discipline or has a voluntary or mandatory formula or contribution, which you could also emulate and say, okay, at least I'm also just trying to put something aside for my business. So there's so someone who's running in the informal sector can also do it. It's just about understanding these concepts. So that's what the financial literacy is about. If you understand these concepts, then you can just put them into practice, have a support group, go to your financial institutions, and also ask for advice on how you can put something like this in place.
You did bring up something important here now about formulas, all this, because this is highly technical stuff.
It's formula.
And having worked in pensions myself, I understand how highly technical this can be. So what are we doing also, as you talked about, the growth of deposits in banks was because banks started to create needs-based savings accounts. Instead of just saying save, they'd say education saving, this type of saving. Now, the same type, even with the unit trust business, the mutual fund business, it seems as though they haven't clicked yet as to going towards the needs of people and serving themselves and saying, look, we can actually create a pension product for you if you are self-employed. We can create this for you in your self-employment time. Because everyone seems to think it's just NAPSA that will take care of them. And I think I don't know if that conversation is being had, that guys, NAPSA is a safety net, but it's not usually going to take care of everything. How are we getting the mutual fund, the SEC-driven businesses as well, who are your partner in all of this, to try and say, let's get even our products towards these people for savings and investment? Are they joining you on this to say the mutual funds need to start helping with the retirement planning and savings?
Yes, they are. So the whole financial education program is a collaboration with the Ministry of Finance and then with the financial sector regulators leading, taking a lead to bring the financial institutions on board. So in the financial sector, the regulators, you have Bank of Zambia, the Securities and Exchange Commission, that supervise the capital markets, that also covers the collective investment schemes, the unit trust you're also talking about, and also the Pensions and Insurance Authority. So in the capital markets, we have also seen that drive and the development. Even from our FinScope survey, the Financial Access Survey for 2020, we've also seen an increase in the percentage of people who are using the capital market products. So I think there are also needs-based products. We have quite a number of, I've attended sessions by a lot of investment advisors. In fact, that is a sector where you find a lot of the financial planners, people that you can see who can take you through your financial planning. You've got your financial advisors, and you also have, I think, your asset managers who can help you on how to diversify your investments. So those needs-based products are across the financial sector. So we do work very well in collaboration, and there is a drive to promote a lot of these products for people.
Now, the final, I think when it comes to the savings and investment question, the final influencer, the social influencer, if I may say, of Zambia, is always going to be the church. Okay? I think this is one thing the financial sector sometimes has not worked hand in hand with those in our faith. And the reason is this. I've noticed, and this is just even me personally, I've noticed that you can drill it into people saying, save, save, save. But the moment the pastor says, save, all of a sudden people are saying, yes, 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 no, the man of God has said it. So are we not, would it not be remiss to try and say our faith institutions, if we can coordinate alongside them, we can get the message through stronger and get the influence through stronger to practice better financial habits as a country?
That's very true. So I know for one strategy, even within the Bank of Zambia strategy, where we've even specifically mentioned the participation and collaboration with the faith-based institutions, is on our rural finance strategy. So we want to reach as many people in the rural areas, and one of the areas that we're looking at outreach is also through partnerships with the faith-based organizations. And even within this whole drive for financial inclusion, we do work with NGOs that do have a link with the churches and have that interaction to promote savings and good financial habits. But I hear your point where bringing them more forward as maybe identifying some to really speak to people and influence those decisions is a very welcome suggestion. So
no, I mean, we have to just
take up.
I think we just have to accept that finance is a principled and habitual activity. It's something that happens, and I think it's wise for our pastors to talk to us even about things like this, and maybe to ensure that the message is coordinated.
Yes.
That maybe even bodies such as yourself should be saying, look, as financial sector development, we should be making sure, because these are things that are spoken of in the Bible. They're there, and if we're going to try and work with people's behavior, maybe. And as this is just throwing that out there, is that maybe we should try and work with that.
Yeah, maybe just to say, like, another way it happens is you find a number of churches do have like maybe like a social business enterprise. They've got youth groups. So we do have one partnership where we are actually working very well with a youth affiliated organization, which is part of the church mother body. So these partnerships are there, and we continue to grow them from strength to strength.
No, that's good to hear, and we're always trying to make sure we try and dig into that. And there's something, just finally, like I said, I think this one point we may have seen. FinScope did point out the fastest growth did come from mobile sector. Okay, and one of the things that maybe we're starting to see is any financial service that then has a spin-off effect with the mobile sector seems to have experienced growth. Obviously, the least integrated were the ones that are the smallest connected to the community. I think 0.3% was capital markets pension, 0.4% or so. Yes. And then we saw that 58% of our adult population are using mobile. What are we doing to make sure that as many of the financial service providers are going to the mobile services sector to experience the biggest growth, and therefore include people as much as possible in both savings and investing, and make sure these things are not elite and kind of kept for those people in the higher echelons of Zambia?
Yes. Yeah, so I think just behind the numbers, so that 58% uptake of mobile has really been driven, I think, with the confidence and accessibility to mobile. It's been very easy to deploy. You have your agents all around, the booths are set up, and then it also has like convenience, the accessibility, you know, like you do not have to move or travel anywhere. So those are some of the driving factors, and even the security that you actually have, or the ease with which you can sign up for a mobile account. You don't need as much like paperwork, though behind that we still have regulations on what the IDs that you need to produce. And it's also an area where there's a lot of collaboration between banks and other financial institutions and the mobile network operators, your Airtel Money, MTN, or new financial services providers that are coming on board. So we are calling this like the fintech sector. So there's a lot of agility and innovation in that space, and that is also an area which is supporting your e-commerce. So when we talk about the uptake, you know, the ease with which you can just make your payments over such devices is also driving that. I think before, like when you're trying to say, like making sure it's not too elitist, you know, like before you'd say, okay, yes, maybe it's for those who have this type of phone, but now you can use it on any type of phone. So it's not only restricted to the smartphone, it can be any type of phone as long as it has the USSD code, you know, your star, your number, hash. So you don't need to have like maybe like internet connectivity. And also the internet connectivity has also been a driving force on that. Zector has really played a key role in terms of the installation of these towers that is now creating more access to this type of transactions. And I think there's just this, I think it's also just become a lifestyle. You know, before you'd say, okay, no, I don't need it. But now if somebody just says, oh, I'd like to transfer 50 kwacha to you, and you say, I don't have a mobile, it seems a bit strange.
That's true.
Yes, and I think it's just, I think it has sort of like narrowed, let's say like distance.
Yeah.
You know, before if someone from home says, oh, I need money for ABCD, you'd say, okay, come all the way to town. But now somebody would just say, oh, call you and just say, oh, madam, can you send money for vegetables? 50 kwacha, there's a booth here, I can go and cash out. So it's now become a lifestyle, and it's accessible to everyone. So I look at like your taxi, you go to the market, you can pay. And I think that is one of the convenient things that has driven it, is that you can get, it's like it's real time. So you don't have to wait until tomorrow to receive your payment. So people know, okay, I can sell this good and get immediate payment. So even just the way it's helping with the trade and day-to-day activities is what's driving it at the personal level, and even just at the business, the SME sector, the informal sector that you talked about is also driving the uptake of the use of mobile, because of the way it's also helping their businesses.
Because I think this was just, I mean, to add in, this was the driving force also between part of China's success as well as a country, where they've pretty much everyone uses mobile banking, and therefore everyone leaned towards it. Seeing that rise of the cheap phones, seeing that rise of the fact that
Yes.
the simple phones are less than 100 kwacha, even smartphones are coming at 300 kwacha or less when they used to be 3,000.
Yes.
That's driven quite a lot of the growth in this sector. And I think that is something that we would like to take upon. But going into the next biggest section, and obviously because of mobile inclusion, now we can start talking about financial inclusion with a bit more positivity, because
Yes.
one number that caught my attention really big time was in your recent payment statistics as Bank of Zambia, where we saw the mobile payments defeated the 100 billion mark. And actually beat everything else, and this was like it was a shocker because it came from behind. The mobile payments was the
It was just started growing, because even from our FinScope, I think the first time, because we measure this financial access every 5 years, so 2015 was the first time for us to measure it, and it's a statistic that we now measure like every year. Yeah, so we have seen that exponential growth, again attributed to these factors: ease of deployment, even just one of the things that has also driven that is that we've also now increased the type of the limits, the transaction limits, because we now see that this is really part of the technology or the payments infrastructure that all businesses need, that households need. And I think there's also the convenient now is that you have a lot of like utility companies now coming on board. So you can pay for your water, you can pay for your electricity. You also have education institutions where you can pay for your school. So I think just that convenience that it's providing to people is now making people move part of their deposits from their bank account, hold something on their e-wallet to ease these transactions that they have to make. So it's a huge, I think it's a huge partnership collaboration. Everybody sees, whether it's a service provider or the users, everybody sees the need for these platforms.
Am I one day going to live in a Zambia where I just move around? I saw this interview once in China where they asked a young lady, when is the last time you used cash? And this was in April. And she said, I still have a 30 yuan note in my pocket. I said, I still have it, and it's from New Year. She said she had gone 3 months. She hadn't used cash because everywhere she was going, mobile payments. And since mobile has been a driving force, are we looking at a world where we're going to integrate commerce, everything together in that platform, because it's been so successful, to make sure that we include as many people? Am I looking at a Zambia where I can go on a bus and pay with my phone
happening.
and pay at the market with my phone, pay at the restaurant?
It's definitely happening. We're going towards that. I know cash will still have its place. Yeah. So we're definitely moving towards that. And I know even like from our own strategy, I think the deployment is of also the point of sale. So when we talk about mobile, there are so many forms of like electronic payments which are now taking place. So whether it's your contactless or whether you're using a card, there are so many forms of electronic payment where people don't necessarily have to use cash. And as Bank of Zambia, we have been running these campaigns in collaboration with the mobile money organizations. We had a recent campaign which is the theme was Go Cashless. So it just shows the convenience, again, with which you can transact. You don't need to carry cash. You can move around, and even just this prevailing situation, especially where we had issues of like the lockdown, restricted movement, we've seen a lot of like e-commerce coming on board, so people could still buy and pay for services. So I think that this whole, we'll just now call it almost like a digital economy, is actually continuing to support the use of these platforms.
And I saw it. I'd like to obviously give a shout out to NAPSA for being one of the first I experienced, where I got to online pay with a mobile payment when I was making NAPSA payments.
Oh, that's very good.
Even for people's workers. I actually now started showing people. I even showed my parents how to do it.
So you don't need to go and queue. So you know, so that the hassle is no longer. You don't need to queue or spend time. You know, like we're talking about like traffic. You know, you can avoid all that by just doing everything from the convenience of either your home or your office.
So I think that was a very important point for financial inclusion, and maybe the question is from the user side, the mobile side. Now the other part of financial inclusion, which I wanted to start looking at, was financial inclusion from the supply side. Zambia, as we all know it, is mostly a foreign-driven market where the locals who want to engage in the financial services kind of have to get involved by just in the smaller parts of it. We'll just own a little, we'll own a bureau, or I'll be a money lender, or maybe a microfin. But in terms of the dreams and aspirations of Zambians owning banks, obviously, it's very difficult for us to build banks at the higher level. Is there a vision or an idea of including more of the lower tier banking licenses for Zambians? Maybe if I want to just serve a constituency, maybe if I want to serve just a city or a town, maybe if I want to be a village bank, but I still can be trusted as an official banking tool. Are we looking at that because we want to also own our financial sector, not just be the customers, but also be the producers and service providers in our financial services sector?
Yes, that's a good aspiration, and it's the environment is there to do that. So within our license categories, we do have categories where, as you are growing, you can start with the microfinance license. You could start either as a non-deposit or a deposit taking, and then you graduate as your volumes grow, because it is a regulated space. We just need to ensure that we're safeguarding the deposits of our customers. But when you get your license, you're not restricted to, or let me say, you're not compelled. You can actually decide where you want to operate. So even with the current license, you could say, well, I will operate maybe in this part of the country, or this is the segment, this is the geographic reach that I'll have. So there are no restrictions on that. It just depends on how your business model will be. So that is very possible. And even with the current banking structure of both our local and international banks, we have regular dialogue with all the financial institutions about our financial inclusion agenda. So it's a national strategy that has the buy-in of various stakeholders. They're coming in with diverse products, like the purpose-driven accounts that we were talking about. They're also bringing in innovation. They're also investing in the infrastructure. So they are playing a role, and we do have this regular engagement where we talk about the financial inclusion and the need to really cascade financial services to as many people as possible. So
just to get onto that point, I mean, one of the issues I think maybe I'm trying to get down to is that finance is a very personal finance and finance itself is cultural. Yes. I think we try and get away from that and treat it as mathematical. Really, it's cultural because a lot of it is behavioral. Yes. Savings, investment, spending, all of our cultural practices are tied in with our money. Mm-hmm. So our cultural form of finance was the chirimba. In other countries, they call this the credit union. And one of the things I saw, if you go back in American history, for example, is they actually created a Credit Unions Act, where they formalized the credit unions, and therefore that's been the guiding light that's absorbed a lot of the people who were not included. Because opening a bank account, though it may seem simple, it's not easy. Because a lot of people can't even provide a proof of residence.
Yes.
That is a difficult thing, and mobile money has obviously helped that to a degree. But the question is the latitude of trying to formalize that. Can we do what they did, possibly, and bring our Chilimba system into the fold and formalize it, and then allow for that? The reason I'm saying geographic restricted licenses is also, and just to bring to this point, is that when somebody's geographically restricted, they're more inclined to give out loans to the people in there, and you do see a lot more activity where something is a big leviathan of an entity. It's going to serve the richer clients first, and I'm sorry, that's just a credit rating system.
Okay.
It always works that the richest will get access to finance first. What are we doing to create the poor man's bank, the one that serves a locality and serves those people well, and the village bank, to bring the village bank and Chilimba system into the fold to be more formal, so that we can have full-out inclusion alongside the mobile sector? That's really what I want to try and
Okay. So the way our financial sector is structured, it's let's say like in tiers.
Yeah.
Okay. So we do have let's say like banks like National Savings and Credit Bank, Zanaco, that we find are really widespread and serving as many people as possible. Then just coming lower, below that, let's say you have your microfinance institutions that are also working in different areas. But speaking to the point of the Chilimba, I like that you've brought it out, because it's a community-based financial service that we also monitor. We also measure it as well, like looking at financial inclusion and financial access. And we've seen like forms of the Chilimba, the village banking, the savings groups are growing because people want to empower themselves. So that we recognize is operating like in the informal sector at the community level. But what we then encourage in collaboration with other agencies is that as those grow, they will then need to get the relevant license. So when they want to have more members or increase their outreach or maybe do more complex transactions, there is a Cooperatives Act under the Ministry of Commerce, Trade and Industry. So they could look at forming a cooperative. Then I think as you get experience, you say, okay, we've got experience now as a cooperative. Let's get maybe a microfinance or a banking license. So those opportunities to grow and become more formalized, or then let's say like ascend into these other top tier like banking licenses, it's actually there, and we do have these discussions. But on the other hand, when we talk about bringing even the Chilimba under our strategy as a Bank of Zambia, we're also looking at linkages between the existing financial institutions and the Chilimbas, which are there. And what we've seen is that a number of these financial institutions are now even designing products for the savings groups. So bringing those savings groups as individuals into, as a group, into the financial services in terms of provision of services. So yeah, that is what is also happening on the other side in terms of service provision. But the opportunities and scope to grow from your Chilimba to the cooperatives into other forms of financial businesses and institutions are provided for as long as you get the appropriate license.
So I think maybe, yeah, that I think is, and the rise up is something that I'm really happy to start seeing, that there can be a graduated process. And for those who are looking to get into that sector, please think about that. Finally, you want to look at children, okay? Because financial literacy is something that you can fix in one generation. And also, 55% of Zambia is people below the age of 15. Yes. We're young, we're children in this country.
But you're very useful.
So the question maybe I would ask is, looking at the rise of things like mobile technology, kids love playing games on their phone. Are we looking at trying to integrate education strategies? Are we looking at also lowering it also so that the younger people can get into the financial, can start getting financial education? And also, granted that only about 29% of Zambian adults finish high school, are we bringing it in earlier into the education syllabus? Unfortunately, we've only got a few minutes to really tackle that. But are we looking at that kind of strategy to integrate the education system at a lower level and at an early level, and how early are we looking at starting children?
All right, thank you for that good question. And I'm glad to say that it's taking place. So with the National Strategy on Financial Education, we have taken the long-term view and included children and youth in the education system. So they are actually learning about these personal finance concepts from as early as grade 1 or 2. So it's basic concepts like what is money, can they identify money? As long as they can count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, when they look at a note, they can identify, oh, this is 5 kwacha, this is 10 kwacha, 20 kwacha. They're then learning about, prioritizing, is it a need or a want? How can people make a plan for their expenditure? So it's the same concepts parents learn, but at the very basic level. Even about the issues about taxation, they are learning that. We were recently reviewing the curriculum, and it was a very simple example that if you show a child a school or the roads which are being built, you'd say, who is building this? It's government. Where's the money coming from? Government is able to use taxes, part of people's income, to pay and construct these. So the curriculum from grade 2 up to grade 12 has been embedded with financial education on entrepreneurship, borrowing, saving. So it has started very early, and to complement that, we then have these projects for the campaigns to now speak to them, take them brochures, and then the financial institutions come on board to provide them the savings account. So it's a whole integrated financial education, financial inclusion plan for children that takes that long-term view, so that by the time someone goes to primary, secondary, finishes, they're also completing their education with savings that have been accumulated or meet their education needs.
Which is, look, it's something we all wish we started with.
Yeah.
But I wish we had more time to try and delve into that. And like I said, one person actually told me, and this was just a by-the-by note, one parent said, look, I give my kids pocket money, but I tax them as well so that they learn there's a thing called tax. But they were putting the money in a savings account quietly, but they were charging their children tax.
Oh, that's a very
So when they grew up, they knew there was a thing called tax. I think that has been a very insightful session, Ms. Kaweshe. Thank you very much for today. And I hope all of you who have actually been watching today and learning as much as you can from financial literacy can understand where we can actually do this. And just for one last thing, is there a site or so forth where they can reference some of this material? Where can they actually see some of this material just quickly in the last minute, so that we can finally just issue our viewers where exactly they can get more information about this? Okay, so on the national strategies, they can access the Bank of Zambia website. It's www.boz.zm. And they can get the materials from there. Thank you very much, ma'am. Thank you for your time. And to all of our viewers who have actually spent some time with us learning financial literacy, there's more to come. Enjoy it. There's many more returns. And remember one thing, your personal financial decisions are in your hands. Your personal financial health is in your hands. Your decisions make your future. Have a wonderful day.